What's going on, people? It's GBP baby. It's currently 8:40 p.m. the 3rd of May 2023. We've just had FOMC today. We're on Wednesday, and yeah, we're going to talk about what we've witnessed today. So Monday I outlined that these highs. I have my eyes on these highs here, and I'll show you what I've got marked out. So in my last video I marked out these levels here, and here for potential buy side liquidity to reach for, and these levels here. And then after Tuesday I noted these highs that I wanted to see us trade to. I'd like to see price trade up there and take out this buy side liquidity on the way up. So Wednesday we saw us trade to these highs. We had a pullback during New York, and then as New York opened, we moved higher during FOMC and did tag these highs as the news release happened about the interest rates. It's quite interesting because my bias, as we traded down below here, I knew these highs would get attacked as they did. However, this trading through this, I was unsure how price was going to react to it. But we can see that we traded above it, and now we're finding a level of support by the looks of things. So we're just going to take that into consideration. So what am I expecting? Considering we did tag these highs, I am now expecting us to run up into the levels which I had marked out on Monday originally. So I am going to bring them back. If you watched yesterday's video, you'll know exactly what I'm talking about. So if you watch Monday's video, you'll know exactly what I'm talking about. So let me just get those levels. Just mark them levels out again. They were here. And it was the midpoint of here, and then this is consequent encroachment. And then I wanted to get the midpoint between those two levels. There, so we'll mark that in red. And then if we drop down to the hourly, we can see. So yeah, these are the levels I had marked out on Monday. I'll just put them back in now because of how we traded above this level here. You can see that we're finding support now, so I am going to draw this out again, and I want to see this act as support so that we can drive into this buy side liquidity. So yeah, FOMC was today. If we drop down to the 5 minute, we can have a better look, and we can see how we traded above the Sunday opening. This is a Sunday opening price, and then instantly reacted and turned away from it. And this is why the Sunday opening price is so important, because you realize how sensitive the levels are, and the fact that when we react like this, it's likely that it's going to try it again and trade through it. Because if I do want to see this high get taken, which I do, I want to see it trade aggressively through this Sunday opening. So that's what I'd like to see moving forward. And yeah, there's reason to suspect higher prices as well. Again, here we can see our prices reacting to this level. It's refusing to trade any lower. I am going to mark out the 50% level. So let's get that sorted. Let's get rid of this for now. I haven't actually looked at Euro today, so I might take a quick look at that once we're here. So yeah, that's pretty much all I've got to say really. We hit again, if you watched yesterday's video, you'll be aware that these highs here was seen as a target. I did actually trade my demo account today into these highs, and that was a beautiful entry in the London session. That's why you'll see I have London delineated here, 2 a.m. till 5 a.m. and I entered on this candle because I wanted to buy in this fair value gap here. Obviously we traded through it, but I had a buy limit, so as soon as price entered into here, it executed, and then we traded very quickly and aggressively higher and started running into these highs. Touched the bearish fair value gap, traded through it once, moved away from it. As New York started, we traded again, and this time we passed through it. So this was like a standard, this is classic price action for like a day, you know, manipulation, expansion, retracement, and then continuation. And the continuation was right into these highs. So we've now broken this range. And the fact that we've broken that range again shows a likelihood of us moving higher, which is why I have my eyes set on this target up here. I should have really left them there from Monday, but you know, biases change. But at least we can have more confidence in knowing that it's likely that we are going to trade up into there. Furthermore, Tuesday, this could be the low of the week. If that is the case, then again, that's classic price action, as in Tuesday making the low or high of the week. And yeah, now it's just a matter of seeing how we treat this fair value gap really. I don't really want to see price trade much lower than the 50%. Like I don't want, it can trade below the 50% level, but I don't want it to leave. I don't want to see it leave this area here. I want it to remain within here. Collect some buy orders and then move higher tomorrow and take out this stop here. So yeah, let's mark out New York. Yeah, and then we can put the same tomorrow. I might trade tomorrow London as well. Depending if I'm awake. But yeah, that's pretty much all really. FOMC was, as you can see, like this kind of price action, it can be very deceiving. But like I said, I am expecting higher prices now, and you can see how we're respecting this level. And this is again another thing which you really need to understand when trading ICT concepts. Like this was once a bearish, this was a bearish fair value gap. We traded back up to it. It respected it, so it's still a bearish fair value gap. We traded back into this order block here and this rejection block here. Let me make this more clear. We get straight to the 50% level of that. Can't make this up, man. So yeah, we traded to the 50% of that, and then we traded through it. And it's also recognizing the times at which this happened. So when we made this low, it was 8 a.m. and we were expecting higher prices anyway. So base of that, that would have been a nice entry for us to run up into these highs. But again, with FOMC, probability drops off, and it's probably not even worth trying to. It's probably not worth the risk, so to speak. But why I decided to trade London today was because again this was the range we were in, and at the time we were below the 50% level of the total trading range. Let me try and make this more clear. So this is premium and this is discount, and we were in discount, which is why I was happy to buy. Anytime down here I was happy to buy. So as London made this low, I bought, knowing comfortably that it's going to eventually trade into the premium, and that's exactly what happened. Discount right into premium, hit discount one more time, and then left it. And now that we've left it, I'm expecting us to now trade above premium into these levels, because I know that there's buy side liquidity and consequent encroachment. So yeah, that's my stance on things. Also, again, this is the Sunday open. We haven't actually traded above it properly yet, and it is the beginning of the month, so I do want to see some kind of trading above that level before I see lower prices. And that's why I originally had my eye on this high all this time, because I was thinking there's no way we're going to start a new month and not trade above into the highs of it, like in the early stages. So that was another reason I was very set on thinking that we'll trade above it. But yeah, man, I'll take a little look at Dixie. How long have we been going? We're going for 10 minutes. Let's have a look at Dixie. Yeah, Dixie's looking a bit messy. I don't want to say too much about Dixie, man. It's been consolidating for a stupid amount of time at this point. Like, again, I am still expecting higher dollar, but before we get higher dollar, you know, I want to see GBP at least, you know, run into this buy side, because I don't see why it would just leave that hanging there. And also this high here, I'm also expecting to get run, because before purging off liquidity, it tends to do this. Like, I'll have to find another example somewhere where it does this, but it will create a swing high, it will create another swing high, and then it will purge the highs and then start to move lower from then on. So yeah, I can't find an example right now, but maybe on a lower time frame. Let's have a look. So like, what I'm seeing now is the equivalent pretty much of this. So we have a swing high, it makes another swing high, and then it purges liquidity, and then we move lower. Does that make sense? So we got a high, and then a purge, and then a move away. That's exactly what I'm seeing when I look at the chart now. Got a high, got another high, and I'm waiting on obviously on a bigger time frame for a nice purge of liquidity, and then to move away accordingly. But yeah, we'll see. I'll see what London's saying. I might trade London again. I might actually try and get it on camera, because I mean, on record, then I can show you guys the entry. But again, conditions of the market right now still not the best. But yeah, we'll see. Wow, Euros traded right into this volume imbalance. Is there a volume imbalance? It should be. Daily. Yeah. Euro's very, like I said, a lot more reserved, so it's conservative, shall we say, compared to GBP. But yeah, that's all for now. Again, expectations. I want to see this high get taken, and I'm expecting higher prices, and then eventually a reversal next week or going into Friday. I want to see price start to fall. Thanks for watching, guys. This has been GBP baby, and don't forget to like, comment, subscribe. I'll see you in the next one.